Welcome to The Explainer. Today, we are tackling one of the most, let's just say, divisive stocks on the entire planet, Tesla. Is it really the future of AI and robotics, or is it just a car company that's hitting some serious bumps in the road? Let's get into it.
So let's start with a pretty bold statement from the CEO himself. Elon Musk says to hang on to your Tesla stock because what's coming isn't just a new chapter, but a whole new book. We're going to unpack exactly what that means.
All right, here's how we're going to break this all down. First, we'll get into this idea of an AI supercycle. Then we'll follow the smart money and see who's actually buying and selling. After that, we'll face the harsh reality of the bear case. Is this a broken growth story? We'll touch on the Musk factor, and finally, land on the big dilemma every investor faces. Okay, let's dive right in with the bull case. And the argument here is, well, it's a big one. It's that Tesla isn't really a car company at all anymore. It's something much, much bigger. Yeah, you heard that right. The core idea for the bulls is that you have to completely forget about traditional metrics like car sales and profit margins. They argue that you're not investing in a car company. You're investing in a massive technological revolution that's going to have these incredible software-like profits. So, whenever you hear about weak car sales, the bulls just kind of wave that away. They're focused on a totally different set of catalysts. They see a future filled with autonomous robotaxis, generating recurring revenue, Optimus robots completely changing the labor market, and full self-driving becoming a massive subscription business. This is the AI supercycle they believe is going to totally redefine the company. And look, this isn't just some vague, futuristic fantasy. Analysts like Wedbush's Dan Ives are actually putting a number on it. They estimate that the AI and autonomy opportunity alone is worth at least $1 trillion for Tesla. That's the prize, right? That's the dream that keeps those long-term investors holding on. So if this trillion-dollar AI future is so obvious, you'd think all the big professional investors, the so-called smart money, would be all in, right? Well, when you actually look at the data, it shows a really deep and fascinating split. And first, this is super important context. You have to understand who actually owns Tesla now. It's not just a retail investor game anymore, not by a long shot. Professional institutions, we're talking hedge funds, pension funds, the big players, they now own over 2/3 of the company. What they do has an absolutely enormous impact on the stock. And when you look at what those institutions are actually doing, well, it looks like a battlefield. The most recent filings show that while over 2,000 funds were adding to their Tesla positions, you had almost 1,600 that were actively selling. This isn't a small disagreement, it's a fundamental clash of conviction. And just look at the sheer scale of some of these bets. I mean, this is where it gets really crazy. You have a huge firm like UBS making a multi-billion-dollar buy, basically shouting from the rooftops that they believe in the future. But at the exact same time, you've got heavyweights like Morgan Stanley and Bank of America cashing out and selling off billions. This is a high-stakes war over the future of this company. What's even wilder is that you see this same split inside the company. Elon Musk, the ultimate insider, has been the only major buyer, putting about $1 billion of his own money into the stock. Meanwhile, other top executives and directors, including his brother and the CFO, have been consistently selling. It's a very mixed signal, to say the least. Okay. So all of that division and all of that selling leads us right into the bear case. And the argument here is actually pretty simple. That dream of an AI future is nice, but the current reality of the business is deeply, deeply concerning. And this chart, wow, this chart illustrates the core problem perfectly. Tesla's profitability from its main business, selling cars, has been nearly cut in half. Those amazing margins that set Tesla apart from every other car maker, they've been crushed by price wars and slowing demand. And it's not just one issue, it's a whole pileup of them. Skeptics see what they call a broken growth story. Sales are actually down. Competition from companies like BYD is surging. Market share in China is shrinking. And crucial projects like that new 4680 battery are facing major hurdles. All of this is happening while the stock is priced for a level of perfection that just isn't there. Now we have to talk about something that used to be seen as Tesla's greatest asset, but is now a key part of the bear case, and that's its CEO. This idea of brand damage creates a very real problem. The whole bull case relies on selling this amazing future technology, but how can Tesla do that if, in the here and now, it's losing the very customers it needs to buy its products today? It's a fundamental question. And it isn't just the fundamentals telling this story, the market's technical gauges are too. Now, these are just tools that traders use to measure a stock's momentum. But right now, things like the RSI and the MACD are all pointing to a sustained downward trend. In short, the charts are basically screaming the same bearish story that the fundamentals are telling. So, after all that, where does this leave investors? Well, it all comes down to a fundamental conflict, a huge dilemma at the heart of this stock. The way to think about it is this. When you buy a share of TSLA, you're not really buying one company. You're buying two completely different narratives that are trapped inside a single stock ticker. One story is about a revolutionary AI powerhouse, and the other is about a car company facing some very, very real headwinds. So your entire investment really depends on one single question. Can the future potential of AI arrive in time to rescue the company from the very real business challenges it is facing right now? The dream, quite literally, has to survive the reality. And that leaves us with the ultimate question. Is Tesla's valuation a bet on an extraordinary future that's just around the corner? Or has the dream gotten too far ahead of the reality of today? Are you investing in a revolutionary technology platform or an overvalued car company whose best days of growth are already in the rearview mirror?